Okay, so we are at part three, and I'm going to make this really quick because I know you guys want to get straight to the good stuff, which is getting lending for your startup. So, first, let me say if you didn't see parts one and two, go back and watch it because the general question, if you're catching this right now, is you just want to know where the money's at. And I give you some really key advice as to where that and those initial funds are, usually in your pocket, before you go and get um, bank traditional funds. So let's start there. If you have set up and registered this business, if you have a business plan, if you have already started making sales and money is in your business bank account, if you've taken those initial steps, and if you don't know what those steps are, you can always join our platform for free, minoritybusinesscircle.com. There are about 23 steps of items and foundational paperwork that you should have in place before doing this step that I'm going to tell you about right now. Now, just for background, there are different types of banks, not just by name, but by service areas. So, most of us know that you can go to a credit union, and if you fit the criteria for that credit union, kind of get special pricing, and you can get into the credit union. This is well known for like Navy Federal, Teachers Credit Union, things like that, right? You can often, just based off of being able to fit into their criteria, they structure their lending to be able to help you, because you're a veteran or because you're a teacher. They're familiar with your income type. They're familiar with the hurdles that you're up against, and they're able to help you get through those hurdles. This is exactly the same concept for what we call community banks. And community banks are particularly there to help small businesses and entrepreneurs that are disadvantaged get lending. You're probably like, what? I never heard of that before. It's true. And every single state has a community bank. And sometimes the community banks are branded differently and may have a broader footprint and reach multiple states. And sometimes they are only in that particular state. But what you want to do, no matter where you are in the United States, if you are a small business owner looking for those startup funds, and mind you, this is the step after you did those initial steps, you want to go to a community bank because the community bank has partnered with the federal government, particularly the SBA, and usually has a amount that they allocate annually to small businesses that are disadvantaged and are seeking startup funds. So you're going to go with your paperwork in hand, your EIN number, your business plan, your initial bank account, your a list of, what your initial sales were or what you expect them to be. You're going to have an estimate of the funds that you need, and they, as the community bank, are going to work with the SBA to structure a deal with you that you can afford to pay back if none of your business works out. You will still be on the line for paying that back. You will be the guarantor of that business, which means if the business fails, this loan is still the under your name as the responsible party to return the funds. But they will structure a deal based off of that business plan and lend you money. And those are the startup funds that most of you are looking for. And unfortunately, many of you are looking for these funds in the wrong place. You're looking for it through what we call MCAs, which are merchant cash advances. Those are the lenders that are looking at 3, 6, 9 month bank statements for your business and lending you money at a really high interest rate and want weekly payments. That's a merchant cash advance. You are often looking for it through traditional banking systems. So those are the really big names, the Bank of Americas, the JP Morgans, the Wells Fargo's. Those traditional banking systems are retail banking systems. They do not cater to a small disadvantaged business. They cater to a much larger audience, and they do not necessarily have the time or energy to structure really small deals or look at your case as an individual and take into consideration that everything you're going through. They're using much, their things are more streamlined. Their systems are, their underwriting guidelines are pretty much blanket across everyone. It's very rare that you can get into those traditional banks and get what you need out of it, when it comes to being a small new business. However, a community bank, they have the time, they have the loan officers, they have the experience to underwrite your deal, structure it in a way that they can get the federal government to sponsor the funds, send those funds to their bank, and then they lend it to you, contingent that they know you well enough and they've built this relationship with you and they know that you have the means to pay it back. And so they will be able to trickle those funds through for you a lot faster than a traditional banking system. So what you want to do is go on Google, look up community bank in your state or your city, and the community banks that are local to you will pop up. So for example, I'm in Chicago. I know the community banks here are Wintrust, Huntington Bank, SunTrust. There's a couple of other really small ones that are well known in our communities that work with the SBA, that work to get those deals through. And then a lot of them know each other and are able to also refer you to the bank that would be able to help you in particular. So do that research, and if you're not sure, if you believe what I'm saying, you can always look up community bank versus traditional bank and learn something new, because I know you guys like to do that. But trust me, everything that I tell you guys about, I have tried myself. And community banks are the way to go in order for you to get those startup funds. And as a small business owner, I will also encourage you to get to know your community banks and your community loan officers, because those are also the people that are going to help you as that business grows. The more you have a connection with the community bank, the more you have a connection with the community in general, the more help you'll be able to get in sustaining your business, which sustainability is what you're shooting for, not just the need to show off and throw a launch party. We want you to sustain your business. We want you to be there 18 months later. So you want to engage with your community bank, because they're going to be the ones that help to bail you out in those hard times. They're going to be the ones that help to promote you to resources or clients that you need. They're going to be the ones that are there for you. So start to engage with them today and build that relationship so that you can get the startup funds you need, but also be able to access funds later on. Okay, that is part 3. And then I'm going to record another video and give y'all a rant on something else that's on my mind.